Okay, going to look at some of the products today. Uh, Remember, point number 4 of BIOFA, low cost, broad market, passively managed products exist and eliminate the need for any investment expertise. So what are these products? So I'm going to go through the products today only on the equity side. Um, I'll do the fixed income at some other point. Now, the only reason I highlight these is these are the lowest cost broad market passively managed indexed products. If you can find something lower, let me know and go for it. Now, remember this, an equity portfolio should be 30% in Canada, 40% in the US, and 30% in the rest of the world. And the rest of the world is, of the 30%, 23% in rest of world developed and 7% in rest of world emerging markets. That is a standard portfolio. There's reasons for this that I won't get into in this video because all I want to do is go over the products. Okay, so I'm going to eliminate my face. Okay, so let's start with Canada. Vanguard, VCE, here we go. Click on it and I'm going to go through each one quickly. Note this is the ticker symbol, this is VCE. And let's see, Vanguard FTSE Canada Index ETFs seeks to track to the extent reasonably possible and before fees the performance of a broad Canadian equity index that measures the investment return of publicly traded securities in the Canadian market. Okay, so that's it. It seeks to track this index. There's the cost, 6 basis points. Here is the dividend yield, 3.22%, so it spits off a dividend. Here's the top 10 holdings. Royal Bank, Toronto Dominion Bank, Enbridge Inc., Bank of Nova Scotia, Canadian National Railway, Brookfield Asset Management. If you look at any large cap Canadian equity mutual fund that is actively managed, the top 10 are going to look very similar to this. Okay, so let's go on to Ishares. This is a competing product. So this is Ishares' version of the Canadian equity, the low-cost passively managed Canadian equity product. Its ticker symbol is XIC. It tracks the S&P TSX Capped Composite Index. Now that index is more known, but it's going to get you roughly the same performance as the Vanguard's Canadian product. We don't know which one's going to outperform or underperform. The indexes are a little bit different, but very similar. Seeks long-term capital growth by replicating the performance of the S&P TSX Capped Composite Index net of expenses. Total return for the last 10 years, so this is an average annual return, 7.18. The benchmark did 7.32. You expect the return of the product to be less than the benchmark. There are expenses with any product. There's no expenses with the benchmark. But you expect them to be close. Okay, into that. Fees, 6 basis points. Let's get down. We'll look at the top 10 holdings. Royal Bank, Toronto Dominion Bank, Enbridge, Bank of Nova Scotia, Canadian National Railway. You can see they're very similar. Okay, so that's enough about the Canadian products. So Vanguard's Canadian product and BlackRock's Canadian product. Let's go to the US. So this is offered by BlackRock, not Canada. This is offered by BlackRock US. BlackRock Canada has a product, but it's more expensive than this, and there is no reason to buy the very similar product offered by BlackRock Canada. You're better off with BlackRock, and there's a few reasons for that I won't get into. Investment objective, the Ishares Core S&P Total US Stock Market ETF seeks to track the investment results of a broad-based index composed of US equities. 10-year return number 13.03. Now that's US, right? That's 13.3. You got to factor in the Canadian dollar. If the Canadian dollar rose in the last 10 years versus the US dollar, you would have gained 1303 but lost on currency. I think the opposite happened. I think our dollar fell versus the US, so you would have got 13.03 plus the amount that our dollar has fallen. vis-a-vis the US dollar. The big one here is 3 basis points. That's 3/100ths of a percentage point. I mean, that is almost free. And here's the top 10 holdings. Now, these are all recognizable. Microsoft, Apple, Amazon, Facebook, Berkshire Hathaway, JP Morgan. That is Warren Buffett's company. Google, Johnson & Johnson, and Visa. Okay, let's go to Vanguard's U.S. product offering. Okay, Vanguard, this is, the ticker symbol here is VTI, Vanguard Total Stock Market ETF. This is Vanguard US. Seeks to track the performance of the CRSP US Total Market Index. Going to be very similar to the ITOT of BlackRock. Expense ratio 3 basis points. Okay, top 10 companies. So if I should say this, if you're invested in this product, ultimately you're invested in Microsoft, Apple, Alphabet, Amazon, Facebook, Berkshire Hathaway, all of them. These are the top 10. The top 10 make up roughly 20% of total net assets. So you're invested in a whole bunch of other companies too. Number of companies in this. You're invested in 3,611 companies. Talk about diversification. That's all I wanted to show you there. Now again, this is a U.S. product. All the rest of these products will be U.S. products. So does it have a price? No, I think I'll show you the price on that. Okay, I'm going to go to BlackRock again. Okay, Ishares Core MSCI EFI ETF. Again, Ishares by BlackRock US. This is their US site. This is the ticker, IEFA. I should say this. This has a NAV of, I believe it's the trading price at the moment of $63.60. This is a US price. So if you wanted to buy 100 shares of this, you would have to say, okay, 63 times 100 shares is 6,360 US dollars. How many Canadian dollars do I need to buy $6,360 worth of this product? And, I won't do the conversion right now, but that's what you have to understand that, and don't worry, your brokerage will figure that out for you. Investment objective. The iShares Core MSCI EFI ETF seeks to track the investment results of an index composed of large, mid, small capitalization developed market equities excluding the US and Canada. This is a wee bit more expensive. This has not been a good... over the past 10 years, Canada hasn't had a great past 10 years, and neither has non-North American developed. The benchmark did 5.22% over 10 years. The product's relatively new. It doesn't have a 10-year number. It does have a 5-year number. But it doesn't matter because it's an index fund. Okay, key facts. Number of holdings? 2,459. You are investing in 2,459 companies when you invest in this product. It's bundling 2,459 investments into one product, one investment product. Portfolio characteristics. Fees. 7 basis points for this. It's only 7 basis points. Holdings, top 10 holdings. Nestle, Roche, Novartis, Toyota, HSBC, SAP, BP, Total, and Royal Dutch Shell and AstraZeneca. So I'm sure some of those names you recognize. Okay, Vanguard US does not have a competing product. Vanguard Canada does, but it's like 23 basis points, somewhere in that neighborhood. So that is uncompetitive. Now let's get to emerging markets. So the last bit of our total equity portfolio is emerging markets. So I know the ticker. The ticker is IEMG. Again, this is a US dollar price. Now it doesn't matter. Ultimately, you're investing in the currencies of the country that the product invests in. Relatively new, but it's just tracking an index, so you're not looking for manager skill. All you want to know is the manager can track the index. I should show this. There is $56 billion of client money in this. Both Vanguard and BlackRock are huge companies. That's why I find it hard to believe that any other company can come around and undercut them on price. Okay, fees is 14 basis points for this. Let's look at the top 10 holdings. Alibaba, China. Taiwan Semiconductor, Taiwan. Tencent Holdings, China. Samsung, we've heard of that. Korea. China Construction, China. Naspers, I've never heard of that before. Ping Financial, I've never heard of that before. And you can see China Mobile, I've heard of that. Now let's get to the country breakdown. Here's the country breakdown. 29, these are all market capitalization weighted indexes. So 29% of the fund is invested in Chinese companies, 13 in Taiwanese companies, 12 in Korean companies, 9 in India, 7.45 in Brazil. You can see the rest. We don't have much of the portfolio going into this product, but you can't ignore emerging markets. Let me go to Vanguard's emerging market offering. Now, I'm showing you competing products. You can invest in one or the other or both. I don't think there's any reason to invest in both. But if you want to, you can. Okay, so Vanguard FTSE Emerging Markets ETF, the ticker symbol is VWO. 12 basis points. Invests in stocks of companies located in emerging markets around the world, such as goal is to closely track the return of the FTSE Emerging Market All Cap China A Inclusion Index. Number of stocks, 5,074. I didn't look at what was on the BlackRock product, but it's probably similar. The top 10 companies make up 20% of the portfolio. So we see the top 10. Alibaba, Taiwan, Tencent, China Construction Bank, Ping A Insurance, Reliance, Naspers, Petrobrasilio, Housing, blah. So very similar companies. Now the indices are a little bit different, but because it's not exactly the same. That is somewhat interesting. I don't think the top 10, the names might be the same, but they're in different orders. Now this is the biggest, and this would be the smallest of the top 10, and there is 5,064 more to go. The indices are different. I think I would be indifferent of investing in one or the other because I don't know which indice is going to outperform, and they are so much more similar than they are different. So don't worry about which product you should invest in, whether it's the VWO, Vanguard's emerging market product, or BlackRock's emerging market product. They're both going to have very similar performance. I think I'm going to leave it there. Oh, sorry, I did want to say this. So, you can get the Canadian market for 6 basis points. You can get the US market for 3 basis points. You can get the developed non-North American market for 7 basis points and emerging markets for 15 basis points. That means the total equity portfolio cost is 5.6 or 5.7 basis points. A little more than 1/20th of 1 full percentage point. This portfolio would cost you at least 180 basis points if it was an actively managed portfolio of funds and bought through a financial advisor. If you walk into your bank branch and get some sort of global fund of funds product, it's going to cost you, I would say, closer to 2 than 1.8%. So 200 basis points versus 6 basis points. Anyway, thank you. Hope that helps.